Hey guys, Boris Oscar from BK Forex. Welcome to our daily Forex technicals of 4913. Dollar yen fails today on its first try to take out the 100 level. As always, past performance is not indicative of future results. Trading Forex carries high level risk and never suitable for investors. High degree of leverage can work against you as well as for you. Before deciding to trade any such leverage products, you carefully consider your level experiencing risk appetite. Possibility exists you could sustain a loss some of your initial investment, and therefore you should not invest money you cannot afford to lose. Should be aware of alerts associated with trading on margin and seek advice from a financial advisor if you have any doubts. Information including commentary trade ideas provided with you for SAC should not be relied upon self-sensitive research, which should be informed for making assessment decisions. BK Force LLC and common merely providing this information for general information. The information opinions presented do not take into account any particular individual investment objective, financial situation, or needs. All investors should obtain advice based upon their unique situation before making investment decisions. They should tailor the trade size and leverage according to their own personal risk appetite. We're not responsible for any loss incurred on investments made by readers or clients as a result of any information contained here. We do not render investment, legal, tax, or other professional advice. And if legal, tax, or other professional advice is required, services of a competent professional should be sought. Well, of course, dollar yen is the key trade of the day today. Everybody was very, very hyped up. Let me just bring up the chart here. There we go. Everybody was very, very hyped up about the 100 level. And at the beginning of Tokyo, we did have the break above 99.50. With everybody really focused on the possibility of 100 as a possible run. But the momentum has been so strong over the last 2 days, and now the 100 had so much optionality against it that it was actually, I guess, not surprising in retrospect to see the level fail here. And as you can see, the level failed. Now we're entering standard dollar yen profit taking mode where you're going to have pretty sharp move to the downside. The key thing I think right now is where's the support level? The support level actually could be as low as 98 at this point because remember we gapped up from the weekend, so we're basically still above the gap. And even if we halt at 98, that'll be above the gap position. But liquidation in dollar yen, obviously, I think having a drag on everything else. It's obviously having a drag on euro yen right here, and that in turn, of course, is dragging euro dollar. So everything is kind of interrelated off of this profit taking move. And the critical question is, just where's the support here on the charts? Again, going back to the dollar yen chart because that's sort of driving everything. You could make the argument that support is first at 98.50, which I think is a natural support level here. That's what we consolidated for most of yesterday. And then support level is 98. And then, of course, we break those. We're basically covering the gap. I generally think I think if we give up 98.50, the move towards 98 is going to be pretty swift because the kind of moves that dollar yen makes when it does profit taking is pretty sharp. The fact that we failed at this level, I think, is painful to the longs for the time being. The only way this becomes a buy at this point in terms of the short, in terms of the longs retaking power, is it really has to barrel through this level. It basically has to go 99.75 and come very, very close within the 100 mark in order to kind of reestablish the long bias as it stands right now. Right now, we're operating under a profit-taking regime, and 98.50 is the first level, 9800 the next one. That seems to fall into place. Obviously, euro sort of getting sold off on the euro yen, but kind of holding right now underneath above the 130 level. That's mildly bullish for the pair. It failed. The euro failed actually at an interesting level too. It failed at this right above this 30.50, which was the old gap fill, right? So we kind of filled the gap, came right back down, a natural profit-taking area. This is going to be a pretty big. I think a big area here to consider, because if we can hold this area, if we can sort of if we dip below 30, come back up, dip below 30. Bottom line is, as long as we don't give all the way down to 29.50, the consolidation area here could build up enough support for us to push through and really take out the gap with conviction and take us all the way out to 131. If we start to kind of wobble, breaking down the 130 and start to drift over to 129.50, we will have made essentially. Probably, like I said, this would be the second, a double top here, basically another distribution top, and that really opens up a kind of a very negative price structure, puts us all the way up on track to 2900, and of course the really big support, which is the 28.50 support. That's the old support. So failure here would just kind of unwind the whole position in the euro all the way to the downside. For now, the longs are holding on. 3000 appears to be holding on, but we really need to make a second run above this level. We'll see how the trade, the day develops, but we need to be watching this very carefully. on both sides of the 130 level, because this starts to get deeper into 130 and starts coming towards the 2900. That would really look much more like a distribution top rather than a consolidation into a breakout of higher. Aussie looking a little better. Let me just go back to Aussie here. Aussie held this 103.50 level again, and kind of came back above the 104s. But really, basically, the story with the Aussie is this 103.50, 104 range. We're just really consolidating, and we need to, in order for Aussie to kind of reestablish its really strong upward bias, we've got to take out the 104.50. We've got to be trading around 104.60, 104.70 in order for us to make the third possible run towards the 105. Now 105 has been a cement ceiling for this pair, but sometimes maybe the third time is the charm. So if we take out the 104.60s, the bias definitely turns much more bullish, and the probability 105 becomes much more clear. On the other hand, this seems to be pretty strong support for now, and barring any very, very severe sell-off, this should be able to hold for the next couple of days. Lastly, cable is definitely a failure at the 153.50. But cable is sort of a very weird pair where we go up to a level, we fail, but we don't really correct too badly. So the key question is, how far do we correct here? The one thing that's I think problematic for longs here is this 52.50 level. We start giving that up sharply. It's very feasible we take out the 52s, but really the big support then doesn't come up till 51.50. So if we have a distribution top here in cable, support in cable doesn't come up till 51.50. Therefore, you're kind of in a free fall anywhere in this range. Conversely, if we start to rebuild back up, we really don't have a buy signal of any consequence unless we clear the 53.50 or say around the 53.75, somewhere around there, in order to get some bullish momentum to get up in cable. So it's either kind of a buy and support over here or a buy and a breakout here, but now it's in the midst of nowhere land, which cable can sometimes be in. That's pretty much how everything shapes up. Going back to the trades, it's really going to be the story, I think, of dollar yen liquidation. How sharp and how powerful this profit taking is. If we kind of consolidate here and really don't go much beyond this 98, in other words, if we basically consolidate above 98.50 level, that could actually be construed as relatively bullish, because it could give us a second pause and consolidation in order for us to take another run at the 100. For now, clearly the 100 failed, and we're paying the price by seeing a profit taking in the pair, which is dragging everything else down along with it. This is Boris Schlossberg for BK Forex. Over and out. See you guys tomorrow.